Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were active off of that 83 quarter to 85 quarter zone, which was hit yesterday afternoon, which was also a zone where we expected a little bit more of a sell response. At the same time, we have to note that Nasdaq made a marginal high yesterday, which resulted in a little bit of profit taking. Now, the larger time frame bias continues to be quite bullish, but because these markets have actually hit some pretty decent upside targets, we have to be a little bit more flexible with our intraday bias now. So for the last several days, we've been heavily leaning on that larger time frame bullish bias and taking aggressive trades on the long side. Now, for the most part, that theme can continue. It's just that because Nasdaq has made a marginal new high on the year, and ES has hit a pretty decent upside objective as well. We just have to be a little bit less aggressive on the long side. We have to be a little bit more aware of trade location and just be a little bit more flexible with our intraday bias, simply because there can be some consolidation, some profit taking before we get another directional move. Now, off the open, this 72 quarter to 74 quarter zone, which is the initial support zone on the day, is really going to help establish that short-term bias. Now, larger time frame bias is going to remain bullish even if we get a large pullback. Right now the larger time frames are so bullish that even a deeper pullback would not really affect that market structure. But on the smaller time frames, ideally you want to see ES holding above 72 quarter to 74 quarter. Now, breaking that zone doesn't necessarily mean that the market is all out bearish. It just means we have to be more neutral with our bias at that point. So if we're holding initial support, then on the upside, we can still go back and retest the 83 quarter to 85 quarter. We have this short-term resistance zone in between at 78 quarter to 80 quarter. And, if we can take that out, then of course we can retest the initial resistance zone and fill the gap and potentially make another high and actually go beyond yesterday's high. Now that's yet to be seen. We need to see some participation from the Russell and ideally some sustained upside momentum to actually break above the 83 quarter to 85 quarter. But if those things are present in real time, then that's a scenario that we have to be open to. Now on the downside, if you break 72 quarter, 74 quarter, again, it doesn't mean that the market is all out bearish. It just means that we're now a little bit more neutral. The market is trading within the recent range, within the recent balance, and responsive buyers can still be active on pullbacks into support. So a break below 72 quarter, there's some minor support around the 70 area, and then we have support at 65.75 to 67.75. That's better location. We have the balance area high volume node at 62.75, and ideally, even in the event of a deeper pullback, you still maintain above that balance area HVN of 62.75. But short term, our focus is really on how the market treats the 72 quarter to 74 quarter area. If it can't hold there, then at least on the smaller time frames, that there is some additional selling pressure in the market. And again, it does not impact that larger time frame bullish bias. This is just very short-term stuff, but our focus is on day trading, so we have to be aware of that larger time frame, but we also equally have to be aware of what's happening on the smaller time frames for execution purposes. So right now, we do have to be a little bit more neutral with our short-term bias. We have to be more flexible with the day time frame. And if we are seeing some clear-cut warning signs in real time, where let's say if the advanced decline line is clearly negative, which it's bound to open on a negative note, so not the absolute value, but if it's trending lower off the open, then today would be a good time to give it a little bit more weight and not completely ignore a downtrending AD, because there can be some profit taking that happens when markets hit major upside objectives. And we could get a little bit of a pullback here. But holding above 72 quarter, 74 quarter, would tell us that even on the smaller time frames, the buy side is actually maintaining control. That is the breakout area from yesterday that marks the recent high from a few days ago, and also the previous VPOC of 72.75. So if you're holding above that area, it tells you that, overall, even on the smaller time frames, the buy side is actually more dominant. The overnight session has been dominated by sell side, but that's very short-term stuff. The overall market structure would still be bullish if we held above initial support, and then the larger time frame market structure would remain bullish even if we got a deeper pullback. So we can still expect buyers to be active at the support zones below, and the lower you go within the balance, the more the probabilities actually favor buyers stepping in. So the deeper the pullback, the higher the odds that the buyers will actually step in at that point and push it back up, given the overall bullish theme in this market and the larger time frame bias being so clearly bullish. As far as the other markets go, in the Russell, keep an eye on the 64 half to 67 half area. Holding above that would tell us that yesterday's breakout of the recent balance is still intact. So ideally, you want to see Russell holding above 64 half to 67 half. And if you break below that, then it puts the short-term breakout in Russell into question, and that can have an impact on the S&P as well. Nasdaq has been leading on the upside, so even if we get a little bit more profit taking or a little bit deeper pullback in Nasdaq, it wouldn't necessarily mean that the other markets have to go down at the same rate or the same magnitude of move as Nasdaq, because that's the market that has hit the major upside objective. It made a marginal high on the year, so there can be a little bit more potential profit taking that takes place there, and it really would not affect the larger time frame bias, because that market's been leading on the upside, and the other markets, S&P and Russell, actually are the ones that need to catch up. ES has been following pretty well. Russell has been lagging for the most part. Yesterday we saw a catch-up move, and Russell is still significantly off the highs and has a lot of catching up to do, so that can still come into play. So that is the context heading into the open. Just calls for being a little bit more careful on the long side even today, just because the markets have hit those major targets. So we are going to be a little bit more conservative even on long setups, whereas up until now, for the last several days, we have been more aggressive on long setups. The focus is still going to be more on longs, but now we just have to read the market intraday and make sure that there are some signs, even in real time, that are supporting the long side. And if there are too many warning signs, then we want to back off a bit and let the market consolidate, pull back to a better zone, and then perhaps re-engage. So off the open, keep an eye on 72 quarter to 74 quarter. That's going to help set the bias for the day. On the upside, 78 quarter to 80 quarters short-term resistance. If we can take that out, that'll be a nice setup targeting the gap fill and potentially higher. So those are the main ideas. Let's see if the buy side can maintain short-term control, and we'll take it from there.